Picture this. It is Monday morning. Sunlight spills across the city as millions of small traders around the world open their laptops. A hot cup of coffee steams next to them as they stare at the screen, watching red and green candles flicker endlessly. In that moment, each one believes they hold the chance to change their lives. They think that if they're patient enough, if they keep an eye on the news, if they sketch out the perfect trend lines, they'll finally come out on top. This kind of hope isn't anything new. It's what's kept this whole trading world spinning for years. You've got courses popping up everywhere, online forums buzzing with tips, stacks of books all swearing they can show you the secret to striking it rich in the markets. Every year, more folks get drawn in, crossing their fingers that this time it'll be different for them. But here's the harsh reality. Nothing really changes. One group of traders after another jumps into the fray, only to go through the same old routine, dropping money, getting wiped out emotionally, and eventually throwing in the towel, totally frustrated. Over on Wall Street, they smirk and call it easy money, because all those misconceptions from the average person are basically the fuel that keeps the whole system running. Most people don't get it. The market wasn't set up so that everybody wins. It was built for just a tiny elite group to come out ahead, thriving on the wipeouts of everyone else. One of the biggest myths out there is that prices swing based on the news. You know, strong economic numbers mean prices shoot up, bad ones pull them down. It's straightforward, makes sense, feels reassuring. But it's dead wrong. Just think about those U.S. non-farm payroll reports. A regular trader spots better than expected figures and jumps in to buy the dollar, sure it's about to rocket. Then boom, minutes later, the dollar tanks. The traders scratching their head, thinking the market's gone crazy. But the market isn't crazy. It's the trader who doesn't see the real play. News is just the spark. The big institutions? They're already locked in way before the headlines hit. They drop the news to suck in the crowd, grab those retail orders, and then yank the market the opposite way. It's not the news steering things. It's a hook to round up the masses. When that doesn't pan out, everyday traders turn to their charts. They trace out trend lines, spot support and resistance levels, and tell themselves the market's going to honor those marks. But that's another setup for a fall. Picture thousands of traders eyeing the exact same support zone, thousands of stop losses piled up right below it. To you, the little guy, it screams, "Buy here." To the Wall Street pros, it's a feast. They drive the price down, trigger all those stops, and flip it right back up where it was headed anyway. The crowd sees charts as their secret weapon. Truth is, charts are like a roadmap, showing exactly where the retail crowd's stashing their cash. And the big dogs use that intel to snatch it. Maybe the trickiest belief of all is this idea of fairness. You, sitting there with a couple grand in your trading account, picture yourself in the same league as these massive firms handling billions. You figure the market's level playing field for everyone. Come on, that's almost funny. The big banks aren't trading on hunches. They've got order flow data you'll never touch. Hedge funds have teams of quants cranking out models that chew through every price tick in a blink. Market makers peek at hidden liquidity and tweak spreads whenever they feel like it. And central banks? They can nuke a whole trend with one policy shift. You think staring at the same chart puts you on their team? Wall Street loves calling that the sweet delusion of the underdog. A lot of beginners latch onto Warren Buffett quotes like, "Be patient" or "hold long term." They mix up value investing with day trading or whatever short-term game they're playing. Buffett didn't build his fortune just by waiting around. He had the muscle, the inside scoop, and endless cash to back it up. You, though? When you hang onto a loser hoping it'll turn, you're just dragging out your own defeat. The market couldn't care less about your patience. It'll strip you clean and move on. So, why do all these wrong ideas stick around? Because they're easy to swallow. People crave simple explanations for all the chaos. They want to think the market's fair, that a handful of rules will turn them into winners. They need that feel-good story to cling to. But the market doesn't give a rip about your narrative. It only tracks the flow of money. And that money? It always runs from the weak hands to the strong ones. The masses buy high, sell low, and stick their stops in the most obvious spots, ripe for the picking. They're the gas in the engine, Wall Street doesn't need the crowd to win. They need them to stay in the game, keep hoping, keep funding accounts, and keep losing. That's why, after all these years, the stats on small traders failing haven't budged. If you want to make it, you have to ditch every one of those myths. Face facts. The market's not fair, and you're not under the same rules as the heavy hitters. Don't bank on news. Don't put your faith in a couple lines on a screen. And don't count on patience alone to bail you out. You need to start seeing the market like a hunter, not like bait. Prices don't budge for the reasons you wish. They shift because of the hidden moves from the power players. If you miss that, you'll always be lumped in with the herd that gets eaten alive. The market's cutthroat. And the ugly fact is, most folks never come out ahead. They live and die by those same delusions. Breaking free starts with smashing those illusions to pieces. Only then can you pull away from the pack and edge toward that rare group actually turning a profit. Let's talk about the real forces driving those price swings. When you're glued to your screen, watching candles bounce up and down, it's easy to imagine the market as this big, open arena where millions of us are just buying and selling, balancing out supply and demand. It sounds fair, even kind of poetic, right? But that's total fiction. Prices aren't born from some even-handed free-for-all, where every voice counts the same. They're molded, steered, and sometimes straight-up twisted by a tiny crew of heavyweights who aren't following your rules. They're making them. Who are these folks? It starts with the market makers, the ones keeping the whole show liquid. When you hit buy or sell, your order doesn't just zap out there and find a match on its own. It passes through these gatekeepers who step up to take the other side every time. They choose when to stretch the spreads for a quick buck, or when to nudge prices just enough to set off a bunch of stops all at once. Then you've got the megabanks, the real whales swimming in this sea. Think JP Morgan, Goldman Sachs, Citi, Barclays. These aren't just handling client trades. They're in it for themselves with stacks of cash that can rattle the whole market. They know right where orders are bunching up, where the liquidity's pooling. You spot a breakout. They see a fat pocket of orders and pull price right into it to grab what they want. Hedge funds are next level. Remember George Soros breaking the Bank of England back in '92 with the British pound? That wasn't some retail guy catching a wave. That was billions in firepower, sharp insight, and flawless timing taking on a central bank. Soros wasn't a one-off. Today, hundreds of these funds run wild algorithms, sucking in data every millisecond, from Twitter vibes to news feeds, all to snag edges you couldn't dream of. And don't sleep on the high-frequency traders, the HFTs. They ignore your candlestick setups or economic reports. Their game is pure speed. Their rigs are parked next to the exchanges, wired with top-tier fiber to cut latency to nothing. They don't care about tomorrow's trend. They just front-run your trade by a hair and skim the profit. Your order's a speck, but trillions of specks build their kingdom. At the peak, you've got central banks calling the shots. A single word from the Fed chair can vaporize trillions in value overnight. Rate cuts, QE, currency tweaks, these aren't background noise. They're the controls yanking the global finance machine around. Fed eases up, cheap cash floods in, stocks blast off, they tighten the screws, everything squeezes, and latecomers get smashed. You might sweat a CPI decimal, but the banks have been set up months or years ahead. As a small trader, wrap your head around this. You're not in a free market. You're on a war zone against foes with God mode advantages. They don't guess directions. They've got the capital, data, speed, and gadgets to twist things their way. That's why most retail folks tank. It's not bad strategies or sloppy discipline. It's thinking the game's fair when it's built to bleed you dry. You're the fresh fuel, the new cash keeping it all humming. Prices don't drift on whims. They go where the big shots steer them. Now, if there's one ugly truth that most retail traders hate facing head-on, it's this. The market is straight-up engineered to pull money right out of their pockets. And nothing hammers that home harder than the stop-loss hunting game. Imagine you're that small trader, poring over your chart, drawing a clean resistance line and telling yourself, okay, If it breaks this, we're off to the races higher. You set a buy order just above it, and drop your stop loss snug below. Feels smart, right? Like you're nailing that risk management stuff from the books. But then, not even 5 minutes in, price pokes down just far enough to nail your stop, boots you out, and, surprise, reverses hard, blasting exactly where you thought it'd go. You're sidelined, account lighter, staring at the screen like, what just happened? This isn't bad luck. It's a scripted takedown. The real deal is, the big players know precisely where all those retail stops are hiding. Our brains are wired predictably. We all spot the same support and resistance, the same old highs and lows from before. So naturally, we bunch our stops in those hot zones. To the institutions, that's not a risk. It's a gold mine, a liquidity buffet waiting to get raided. How it works is brutally straightforward but packs a punch. They nudge price just enough to trip a cascade of stops, which unleashes a torrent of forced sells, or buys if it's the other way. That instant liquidity rush? It's the perfect cover for the big guys to load up their positions without tipping their hand. Stops cleared, they let price snap back to its real path. And suddenly, the retail crowd's on the outside looking in, scrambling to chase a move they called right but got ejected from. This plays out in patterns you'll see over and over. Take the classic fake-out breakout. Price smashes through a key level, reeling in the FOMO buyers or shorts, while zapping the stops of anyone on the wrong side. Looks like the real deal. But nope. It folds like a cheap suit. Longs get trapped up high, shorts are already out, and the hunters cash in from both ends. Or picture a shakeout in a solid uptrend. As prices keep climbing, everyone's feeling invincible and jumping aboard. But lurking under those green candles? A pile of stops right below the little swing lows. One quick dip raids them, fakes a pullback panic, shakes out the timid, and boom! The trend powers on without them. Small traders? Left high and dry, too gun-shy to hop back in. It gets sneakier, too. Price might coil up in a tight range, tension building as bulls and bears load up on both sides. Once the liquidity's thick enough, the pros hit with a double fake. A breakout one way wipes one crowd, then the reverse cleans the other. Field cleared of retail noise, now the market picks its actual direction. By the time the real run starts, the masses are scorched and sitting out. Why does stop hunting even exist? Liquidity, baby, the market's gotta have it. You can't sling billions around without a counterparty on the flip side. Retail stops deliver that on a platter. They're not side casualties. They're the system's snack. Like how a school of minnows draws the sharks. Stop clusters pull in the Wall Street predators. The sharks don't despise the little fish. They depend on them. This isn't some modern twist. It's been around since markets were born. What's new is the tech. Algos and HFT make these raids lightning fast and razor sharp. A whole sweep of stops can vanish in seconds before you even blink. By the time you're moving your mouse, the party's over. The big takeaway for us, small fries. Don't ditch stops, they're essential. But know they're bullseyes. Park 'em where the herd does, and you're gift wrapping your cash. If you're piling into that screaming breakout everyone's hyped on, pause and think, am I early or am I the bait? The market's a jungle, and stops aren't shields. They're supper. Miss the hunt, and you'll always be the one getting chased. Shifting gears, there's this one idea in finance that barely gets airtime in your typical trading book, but it's the secret sauce behind every tick and trend: liquidity. Ask a newbie what drives the markets, and they'll rattle off news events, big picture econ stuff, chart patterns, or investor cash flows. Hit up a grizzled Wall Street vet, though, and their answer's short and icy: liquidity. Without it, the market's a corpse, no pulse, instant shutdown. Liquidity's basically how easy it is to buy or sell something without jacking up or tanking the price. It's the glide, the seamless handoff between buyers and sellers. Thick liquidity? Like jumping into a raging river. You splash in, paddle out, no ripples. Thin stuff? More like stomping in a mud puddle. The whole thing sloshes. For us, retail types with modest stacks, liquidity feels like background noise. A few grand in, you slip in and out no problem. But scale that to institutions dumping hundreds of millions? Suddenly it's do or die. They need a liquidity ocean to swim in, or they'll drown, pushing against their own weight. That's why the pros are liquidity junkies. It's not just the market's lifeline, it's theirs. So, who's pumping this blood? Layer 1. Market makers. The steady heartbeat. They make sure there's always a seller for your buy, a buyer for your sell. But they're in it to win it. Spreads are their cut, and they dial liquidity up or down like pros. Smooth sailing, spreads razor thin. Chaos hits, they widen them, and the flow chokes. Small players get crushed in the squeeze. Then the heavyweights, hedge funds and banks. They don't just trade, they dictate the current. Pump in cash, and liquidity surges, prices fly. Yank it, and things seize up, crashes follow. Every bull run or meltdown kicks off with a global liquidity pivot. Remember 2008? Stocks didn't crater on a single scoop. It was the whole system's blood draining out. No flow, and the finance beast almost flatlined. Liquidity's a blade too. You see a breakout over resistance and think, bulls rule. But it might just be bait to pool up orders. Buys chasing, stops lurking below. Big money raids down, grabs the cheap liquidity, and reloads. Not news-driven, pure liquidity chess. Retail folks mess up big by thinking they're riding trends when they're really tailing liquidity. Smart money flows in first, bulks up the depth, prices pop, crowd smells blood, and dives in. Sure, it's endless. But when the controllers pull the plug, the party's over, and you're left holding the bag as it thins out. Liquidity splits markets too. S&P blue chips? Oceans of volume. You trade without a dent. Penny stocks? A nudge moves mountains, sharks' playground. But it's deeper than digits. It's mind games. Panic hits. Even deep pools evaporate. G20, COVID dash, even US. Treasuries, the safest bet, hit a liquidity wall. Sellers everywhere, buyers ghosts. Proves it's not fixed. It's crowd psych on steroids. For you as a small trader, the hack is tuning into this flow. Don't just chase candles or data drops. Ask, where's the liquidity pooling? Who's feeding it? Who's siphoning? When's it going to dry? Ignore that, and you're blind to whether the trend's got legs or if it's a ghost town waiting. Liquidity isn't optional. It's the decider. Keeps trends alive or drowns you out. On the street, it's not where's price headed. It's where's the blood rushing. Markets don't dance for headlines. They pulse with liquidity's beat. Picture the market like this massive casino smack in Wall Street's heart. Glitzy lights, endless tables, fresh faces pouring in daily. Each convinced they've got the edge, a killer system, lady luck on their side. But backstage, the house doesn't bet on vibes. They rig the odds, stack the deck, and let the suckers slip up. In the end, the house always wins. The chips slide from the masses' wallets to the boss's vaults. That's markets in a nutshell. Not a win-for-all setup, but a grinder where most bleed out, and a select crew scoops the pot. Why do the many always foot the bill? First off, herd mentality. We're pack animals. Safety in numbers. Prices pump, FOMO kicks in, we buy the peak. They drop? Terror sells us the bottom. Rinse, repeat, century after century, tech be damned. Second, that control fantasy. Newbies think a few tools. Some reads, grit will conquer all. Nah, the market's about flows and psych, not fair fights. Herd stops in one spot? That's chum for the sharks. Third, the rush. Crowd craves quick wins, flipping trades like hotcakes. The pros? They chill, strike once. Money cascades from antsy to steady. Eternal law. The few don't need crystal balls. They read the crowd like a book. Breakout? Masses flood in, hyped on new highs. Big money lets it tease higher, then crushes. Stops pop, sells flood. They buy the dip quiet-like, flip it, panic news wave, retail dumps in droves. Pros smell value, load up cheap. Recovery hits, wealth transferred, simple as that. Money doesn't vanish, it swaps owners. Your blow up? Funds someone's yacht. History's littered. .com, 00, retail tech frenzy, bubble pops, insiders cash out fat. 29 crash, masses ruined, savvy buy low, rebuild empires. '08 meltdown, homes lost. Liquidity, king's bottom fish, boom richer. 2020 COVID panic sell-off, crowd bolts, pros snag deals, 2021 feasts. Every bust's a wealth pump from frantic to cool. For small traders, it's not game over, it's learn the code. Ditch the guru indicators or viral strats. This is psych warfare and liquidity hunts. Think counterherd, euphoria, pros dumping, terror, buying time, and patience. Real shots are rare, but huge. Wall Street thrives on majority fodder, no fairness, just a wealth churner, stripping the hasty for the wise, the naive for the knowing. Accept it, no equal shots. But play like the few, dodge the mosh pit, and maybe join the winners. Markets? One job, shunt cash from many to few. When you first dive into trading as a small player, there's this quiet voice inside whispering that you're going to be the one who beats the odds. You convince yourself that with enough grind, enough smarts, enough late nights staring at screens, you'll unlock the secret sauce and join the winners. You swear you won't screw up like all those other folks who've crashed and burned before you. But man, the reality hits different. It's the total reverse. The market doesn't cut slack for big dreams or hustle. It ignores your goals, your sweat, your fire. All it sees is who's going to cough up cash so the next guy can pocket it. And for most small traders, the gut punch truth is you're wired to end up as the liquidity fodder, the ones footing the bill for the elite's gains. This isn't some level field where heart and homework win the day. It's powered by raw capital, info edges, and crowd mind tricks. You, with your starter account and some free online tools, aren't even in the same ballpark as outfits slinging billions, armed with live order feeds, AI brains, and backroom ties. Newbies hate owning this, but from trade one, you're up against a stacked deck. The other side's got every cheat code. Losses don't sneak in from bad chart reads alone, they bubble up from your own head. Greed has you chasing peaks like a dog after a car. Fear shoves you out at the valleys. Rally time, you think it's your big break and load up, blind to the pros already unloading. Crash mode, you freaking bail right when the strong are scooping bargains. Over and over, your feelings get farmed like crops, keeping the beast fed. It all amps up with your bankroll. A hedge fund eats a 20% dip, just a line item, no sweat. For you, that same hit could zero your account. Thin margins turn every setup into all or nothing poker. Stress mounts. Cool heads melt, and logic flies out the window. Small traders swing too wild, dreaming one home run flips the script. But that's the trap that speeds the spiral. Truth bomb, the market ain't your foe. It's neutral, echoing supply, demand, and mob vibes. The real villain's you. Not missing some indicator, it's blowing discipline. Not botching news plays, it's greed on a leash. Not the chaos, it's the itch to act now. Overtrading, fat bets, rumor hunts, signal copying, all that jazz, straight from unchecked impulses. Bottom line, you torch yourself way before the market gets the chance. It's like a mirror, showing your raw edges. Greedy, it'll fleece you. Scared, it'll squash you. Steady and chill, it'll toss you bones. Every position's not just a price bet, it's a character gut check. And most small folks flop not from low IQ, but from not taming the inner beast. Breaking the crowd curse, totally doable, but it demands a full mindset flip. Can't keep chasing that fairy tale system, promising easy wins. Own that small hits are baked in, that sitting out can be gold, that the key question isn't, what's the signal saying, but where's the liquidity? Who's fueling it? Who's rating it? Trading wins aren't a streak of hot hands. They're daily discipline stacking up over time. Yeah, the hard pill. Most small traders will leak dry and ghost the game eventually. But here's the upside. You don't have to join them. Pick the tough, solo road that actually pays off long haul, the fuse path. To step there, gut up and stare down this raw deal. Feels brutal hearing it, but it's your launchpad to real change. Cling to the BS, stay snack food. Face facts, start morphing from mark to shark. The market won't gift wrap success. It shuttles dough from the sloppy to the sharp. So, what's it going to be? Stick as prey or evolve into the hunter? If you're locked in on forging that unbreakable mindset, mastering your emotions, and dodging the pits that wreck most traders, hit subscribe on The Disciplined Trader today. This isn't your average channel. It's built to hone your head game, tweak your tactics, and gear you up to not just hang in trading's meat grinder, but dominate it. Don't wait for someday. Jump in now. Your move. Stay hunted or hunt.